If you're looking for the ultimate flexible, easy access savings account with almost no limits or strings attached, and you want a 15-second solution, then the answer is Marcus by Goldman Sachs, paying 1.15% interest. If you want to understand why I think this is the case versus other even higher interest paying savings accounts, then keep watching. My name is Jay Barrett, and I'm a former investment banker, bond trader, and now entrepreneur, and I'm here to help improve your business and financial game. Most savings comparison videos focus purely on the annual equivalent interest rate for each account, but this makes no sense without the context of the personal banking savings and investment strategy. This is like trying to choose a car based purely on the engine size without first deciding whether you're going off-roading, commuting day to day, or to the racetrack. And despite what you hear, bigger is not always better. So, to put the easy access savings account into context, let's take the example of David, who earns the typical UK average monthly salary of £2,000. Now that monthly pay packet gets paid into David's primary bank account, which might be with typical UK high street banking providers such as NatWest, Barclays, HSBC, and so on. Now from that £2,000, David can choose to allocate that money to three possible areas: functional accounts, savings products, or investments. Now, the functional accounts are things such as a joint account, maybe with his wife, paying his regular credit card statements, or household bills, or perhaps his mortgage. So if we said from the £2,000, he might allocate, let's say, £1,000 to paying all of those day-to-day functional items. That means he's left with the remaining another £1,000 to allocate either to savings or investments. The challenge here, though, is that a lot of people are not that familiar with the best personal finance strategy, and they may be unsure how to allocate across these things, such as savings products like cash ISAs or regular savers or premium bonds, or within investments such as pensions, ETFs, or possibly some crypto. So in order for David to make up his mind, it's going to take him some time. Now, the problem here is that other £1,000 is going to be sitting in his primary bank account while he decides what to do. And unfortunately, most high street banks pay a paltry 0.1 or 0.2%, pretty much close to zero. So that £1,000 is basically earning nothing at all. So a way around this is to use the easy access savings account as a place to park your money while you're deciding what to do with all your savings and investments. You can earn up to 1.15% with the Marcus account. And there are some easy access accounts with slightly better rates. But the key point is here, if you're using this as like a spillover or place to park your money, you want to make sure that there are no restrictions to move the money in and out of from your primary account into your easy access account as much as you want, and pretty much however much money you want. So that's the reason why it's not just about how high is the interest rate, although obviously you want a reasonable amount. And this is already more than 10 times the 0.1% you get in your primary bank account. But you also have to take into consideration how easy or how easy access is the actual account. With that in mind, now let's have a look at the Marcus account and why I think that is the best option. So let's jump onto the Marcus website over here, and you can see that 1.15% AER. That's comprised of a 1.05 gross rate plus a 0.1% bonus rate for the first 12 months. It's an online only account, clues in the name. although they also do have the Marcus app on your phone, which is pretty good actually. You can deposit anything from £1 starting off up to a maximum of £250,000. And that can be paid in from any bank account once you set it up as a nominated account. The only limit to moving money in and out would be the maximum daily transfer limit from your primary bank account. On top of that, it's also the Consumer Guide Which recommended savings provider from last year, 2021. So that's pretty good. And lastly, Marcus is part of Goldman Sachs, and they've been around since 1869. That's 153 years. So I think we're safe to assume they're still going to be around and our money is pretty safe. So I've been using this account for approximately 3 years, since June 2019. And I've found this an extremely easy and simple to use account. I'm going to demonstrate that by quickly showing you how I can deposit £100 from my primary bank account into the Marcus account. So you'll see on the screen here, this is my Halifax bank account. I'm going to transfer an amount of £100. I've already set all the details up in advance. Just click continue. There we are, making the payment. And it says it's sent the payment. So now let's jump over into this tab. View account, should refresh. And there we have it. 5 minutes later, and that transfer of £100 has arrived in the Marcus account. Simple as that. I've also found that the interest rate has consistently increased and stayed in line broadly with the Bank of England base rates as they've gone up. And that's happened automatically. I never really had to do anything, which is nice to know that's happening in the background. And even with that bonus rate, which is only valid for the first 12 months, it's super easy to renew that. You can see here in this area while I'm logged in, it tells you your current rate and the bonus rate. And then down here, you just click on this button, renew your bonus. Just press that. And there you go. It's done it straight away. You've successfully added a bonus. So now my interest rate has gone up from 1.04 to 1.14. So what's not to like? So now we've seen the benefits of the Marcus account. How does it stack up against the competition? I find the best sites to use for online research are Money Saving Expert or moneysupermarket.com, although there are plenty of other comparison sites worth checking out. I've made a table here to compare the best easy access accounts currently and highlight why I still prefer Marcus, even compared to one or two slightly higher interest paying options. So jumping over here, you can see the Money Supermarket comparison page here where you can look at all of the different accounts, and again on Money Saving Expert, they're worth checking out. So in this table, I've used an example of a £10,000 deposit, and as we know, for Marcus, we get that 1.15%, which over a 1 year period would earn you approximately £115 in interest, and pretty much without any limitations. Now, if we look at the next option from Paragon, they are offering a slightly higher 1.25%. However, this is called a triple access savings account, which means that gives you only a maximum of 3 withdrawals during a 12-month period without being penalised on the interest rate. They also have a minimum deposit of £20,000, which is quite a lot compared to only £1 from Marcus. So immediately those two things rule it out for me for Paragon. And then the next one is a similar product from Aldermore. They have a 1.25% again, but this is only a double access account. So you can only access your money twice within 12 months. Plus, they have a minimum deposit of £1,000, again more than Marcus, so that rules it out. The next best option is from Ford Bank. This is actually not bad. They're offering a slightly better 1.29%. And they don't really have any limitations. This offer only appeared halfway through making this video. However, I would say that Ford Bank are a lesser known banking player. I mean, they make cars at the end of the day. But I still think this is worth a look. This is probably my second best choice. Next, we've got Synergy Bank. They're offering an even better 1.32%. However, if you look at the small print, it says here, after 12 months, the interest rate reverts to a measly 0.3% AER. Again, on top of that, they're also a lesser known bank, so I wouldn't go for that one. And then last of all, you have the Chase account from JP Morgan, who I actually used to work for, and they're offering a really good 1.5% on the rate. However, again, if you look at the small print, I think that somewhere down the bottom here, it says to bank with Chase, you also have to open a current account. So that's not ideal because it's a lot more hassle and time to set up a full bank account rather than just an online saver. And also you lose that flexibility with Marcus where you can pretty much nominate any other bank account to move money in and out. It doesn't have to be with Goldman Sachs. So for me, that's a no again there. And on top of that, even with that 1.5%, on a £10,000 deposit, that's only an incremental extra £35 over a year, but you still have all this faff with being forced into a Chase bank account. So for me, that kind of proves my point why I still think Marcus is the most flexible Easy Access account currently available on the market. Now that covers Easy Access savings accounts. If you've gotten value out of this video, and you'd also like to find out why I think pretty much all other types of savings accounts are a complete waste of time in the current market climate, then hit that subscribe button and look out for my upcoming video series. Also, drop me a like and ask away in the comments. I'd really appreciate your support while I'm trying to grow the channel. In the meantime, that's it from me. I hope you've enjoyed it. I'll see you in the next one. Peace.